Oh wow. Okay. You know what? Maybe I've been making videos with no sound. Well, if you guys been watching videos with no sound, why didn't anybody tell me? But anyway, I was assigned. Basically, what happened is I bought this. I sold a Newell contract, one contract for $8, meaning that if the price of Newell was to fall below $8, they have the right, not the obligation. They have the right to make me assign me those shares, which is 100 shares. Anytime you have an option contract, it equals 100 shares. One contract equals 100 shares. Okay, I sold a contract. Anytime you sell a contract, that means you're giving somebody else the rights to that contract. It's just like getting an insurance policy. So when State Farm sells you a contract, that means you have the right, not the obligation. You have the right to if anything happens during that contract, you have the right to execute or assign on that contract, right? Same thing with stock options. With options, is that once you buy a contract, you have the right to execute or assign on that contract. So that's what happened here. So 2 weeks later, here we are, February 14th. I wake up and it says you are assigned a Newell put options for your brokerage account, meaning that, and it says you were credited 100 shares. You were debited $800. I promised that I would pay 800, you know, and I promised I would pay $8 per contract. It says it up here, $8 in order to sell to open. That means I sold a contract, and the reason why I said sell to open is because I sold it to open it. I opened the contract by using a sell. So I sold to open one contract, which equals 100 shares of Newell products, of Newell Company, at $8 a share. It will expire on February 16th. So how much did I sell it for? I sold that contract for $18. Okay, follow me. So now I'm assigned that contract. Why? Because the people seated it went below $8, and the reason why they paid $20 for that is to protect their interest in Newell. They were able to get rid of it for $8, even if it fell below eight, and it did. Now I'm responsible for it now. So if it keeps falling, obviously I start losing money. Anyway, so that's what happened. So basically, it took me down. It says that you bought 100 shares of Newell because your recent option event. There it is. All right, guys. So therefore, now I have 100 shares of Newell products. Oh, that went from this 6,900 dollars. Anyway, it says you were assigned right here, options. Okay, so now what we're gonna do, guys, we're gonna go and we're gonna take our new well, which we have 100 shares of, and now we turn around. We made $20 off selling it. Now we're gonna make $20 off of selling the calls. That was selling the puts. Now we're about to sell the calls. Now the question is, whenever you're gonna sell calls, is where you're gonna sell them at? What price point? A lot of people like to ask, where do you sell it at? I like to go out and look around, look at my time frames, different time frames. That's one day we know. Here's 1 week. Look at the low. The probability potential is that it could drop down to about 662. That's where it's been reached. That's where it reached its low on February 12th. It might be bouncing back up, but who knows? The question is, what has it been doing for the last month? Now, we see that in the last month it went down 40 cents in the last month. What about the last 3 months? Well, it went up 43 cents in the last 3 months. So the probability is that Noel is going to probably stay in a range bound, right? So it don't really go too far low. It don't go too far high. It dipped down to about six, but people get nervous and they get rid of their shares. They sell it to me for eight. Here's eight. Here's eight. Here's 89, 890. I think that a good price to sell this at is either 850, which would make me $50. If I sold it at 850 plus whatever the premium is I get for selling it again, or I should sell it at 9, which is I wouldn't mind keeping Newell because why? I like things that sell that have dividends, and as you can see down here, right here, 5.78 dividend percent. 5.78 dividend percent. So even if I end up keeping it, um, I would probably end up having still getting the dividend shares on it. So that's why I like to do the wheel strategy on products on things like this on the Well brand, because this is a company that has that kind of back and forth, and it's trading a lot in the range. You know, it's not going too far low, it's not going too far high. You know, let's see where it's at. In the last year, it's been up there. So I think the potential for growth, I don't know, Noel products, if we look at the last 5 years, it's down $12. So that's something you always want to be concerned. We might not want to keep it too long. But this may be alone for a quarter, maybe a month or two, three maybe, and just, see what we can do. But the reality is that in the short term, it's trading in a range. In the long term, over 5 years, it's been falling. Why is it falling? I don't know. Probably because Noel products are not up to date. They probably need to get into a different kind of thing. All these physical products are less desirable nowadays. Yeah, do people still use pen and paper? Yeah, but they use computers and laptops and phones more. Do they use labelers? Yeah, but they file a lot more in their phone under files, so the question is, will they be able to make the transition and pivot to a place where they can make money in the upcoming years? And that's the issue. So as you see, the commercial solution, home appliances, home solutions, et cetera, et cetera, et cetera. Garage organization, hygiene system, smoking carbon. Yeah, these are all important things. So, yes, those products probably won't be going anywhere. Any of the office products though, they're gonna be losing money probably. The offices are closed, and even home offices, you don't need 1,000 pens, you only need two or three. So, that's the question. How are they gonna get out of that? So anyway, that's enough on that. Let's just look at what we want to do. So we go down to the trade button. We go to the trade options button. Then we look for, where do you want to go out? I'm not gonna go out till tomorrow. I'm gonna go out to March 15th. That gives me a whole month to to play. $8 will make me $30. Now that you got to keep in mind, if I take that the $8 call option, if I sell a call for $8, which is, you can see at the top it says sell call right up there. How much? You can look down here and see the $8 call option right there. That's the $8. So I will have to that's out to March 15th, and it would give me $30. So if you do a cost basis, I sold it from the beginning for $18. Excuse me. Now I'm selling it again. If I do this, I sell it again for $30. So that's $48. It's almost $50. What does that make my cost basis? About $7.50. So, the question um, is that doable? Personally, I think it's okay because I don't even mind it getting taken back away from me. Because even if it gets taken back at $8, then that's just a $50 gain for me. So um, that's the reality of that situation. So it's just up to you how you want to play it. If you plan on keeping it for a long time, you might go out here to $9 because you don't really want. But the thing is, if you do get called away, which if I looked at the trajectory of Noel, it's going in a downward slope. It's losing money over a long period of time. So in my opinion, I wouldn't want to be in it for too long. And that's a month out. And we know that in a month it lost what, a gain about 40 cents in the last month. But over time it loses money. So I don't want to be in it too long. So at maximum I might do this 1 month, but to me, I'd rather take the $30. And if it sells at $8, which is what I bought it for, $8, but the only difference is I got $18 the first time to sell it, and I'm getting 30 something dollars the second time, so it can be close to about $50. So there'd be a $50 profit over the course of about a month and a half. Is that really worth it? Well, why don't you look at it? $800 of my money being on hold for $50. If you put your money in the bank, $800, just say you put 1,000. Do you think by the time you come back in a month and a half that you will have a $50? If that was the case, everybody'd be rich. And this is the power of options. So what I'm gonna do, guys, I'm probably gonna go ahead and do the $8 because if it get called away, not only did I make the 33 plus the 18, then I also got, so I broke even at the $8, didn't cost me nothing but time. So, okay, so if it's a $50 gain, 51, really 40, $51 gain actually. Okay, so I sell that one. For they trying to put me at, see, the spread is a $10 spread. That's ugly. I don't even like that. That's a wide spread. They're gonna make me take for less than that, which put me under. 18 plus 30 is 48. But what it wants to do is make me take it for less than that. 0.29. Let's see. See? Let's see. 0.28. 27. They're trying to make me go all the way down. I'm about to lose a lot of money. 26. So basically, a high likely field at 26. I could wait. I could put it at 35 right now, and then wait till about lunchtime, which is sometimes what I do. I put it at the high so I can get as much money. If it don't take, it's not like the $8 call option sale is gonna be going away. It's not. It might get cheaper, or I could just take it right now and just take my money and run. You know, just knowing that I got it. Um, right now, because I don't want to have to look back at it again, I might just take the 26, 25. What is it? 25, 26. I'll probably just take the 26. I mean, sometimes I'll put it at 27, then like a minute will pass and it'll take it. But I put it at the medium likely field, and it'll take it within a minute's time. So it's just really up to how important is it for your time to go ahead and close that option. I mean, to get that option executed. For me, I'm not in a rush, but I just want to get it out the way so I can, you know where I stand at it. And plus, I don't, if it falls too low, if the stock starts falling a lot lower, this option won't sell for as much. So, or excuse me, actually, if it goes higher, uh, well, update, they making me put it at 30. That's interesting. I've never seen them up it for my money, for me on my side usually. You're agreeing to sell. Make sure you read before you push the button. Don't get too excited. Relax, take your time. And remember, the money gonna be there. Another chance to trade is gonna be there. You're agreeing to sell 100 shares of New Well for $8. That's what I'm agreeing to do. At a price of $30 credit. You see that? You'll keep your collateral. And if it doesn't, if you're not asked to sell, you'll keep your collateral, which is all of my shares, and your $30 credit. Okay, so there it is, guys. And it got filled at 30. Hey, the bid ask was swinging like a mug, too. At 30, 35 now. But either way, that's a $48 minus the 3 cents or whatever. But that's it. So that is how you guys do that. That's how the wheel strategy basically goes. You sell a put, you get assigned, you sell a call. All right, guys, I'm Mr. Cozmik, Cozmik Training Academy. If you guys need personal help, if you need somebody to walk you through the process, if you need to get on the phone and you need somebody to step by step get on the same screen as you and walk you through it and show you exactly how to do it, give me a call, shoot me an email. I got a Patreon if you got any questions too. We got email address. We're on all the socials. For Instagram, Twitter, and what is the other one? TikTok. So you can see some of the trades on there. I try to do a lot of the live trades. I try to post a lot of my trades on on TikTok and stuff. I mean, excuse me, on Twitter. So there it is, guys. I hope that was helpful to you. I hope that like and subscribe if you're interested in this kind of stuff. And let's pump it up, man. Mr. Cosmic, I'm out here south of the border, traveling around, trading, and living below my means, but still living, pretty good, I say. You know what I mean? So yeah, I'm just chilling. All right, guys. Talk to y'all later. Peace.